Kia ora, I'm Mary Jo, Kiwibank economist. So the latest labour market report delivered another big upside surprise. The unemployment rate fell to a record equaling 3.4% in the September quarter. Now every aspect of the report was strong. Participation rose to above 71%. The underutilisation rate fell below 10%, which is a signal that slack in the labour market is quickly evaporating. And 54,000 more were employed over the quarter, with women accounting for a massive 70% of that gain. Now from the headline numbers, you wouldn't think that a lockdown had occurred. However, total hours worked fell by almost 7%, and most of those working 0 hours were largely concentrated in industries such as retail and hospitality, industries most affected by the lockdown. Now the full impact of the lockdown will likely show up in the December quarter. Many restrictions have dragged on, especially in Auckland, our largest city, which accounts for over 30% of our labour force. So we expect the unemployment rate to rise back toward 4% in the December quarter. However, even if the labour market does soften, any damage is likely to be limited and short-lived. Vaccination rates are edging closer to target, which should allow lockdown areas to gradually reopen, and still without access to overseas labour, the intention to hire Kiwi talent remains strong. So we expect the unemployment rate to fall back below 4% relatively quickly. Now, a really tight labour market means upward pressure on wages. Over the year, wages rose by 2.5%, which is the highest rate in over a decade. Now, because of labour shortages and mounting inflation pressures, wages are set to rise further. We expect wage growth to peak at around 3.5% by the middle of next year. Now, if inflation pressures stick around for much longer, wage inflation could run higher. And from a price stability perspective, the Reserve Bank would be concerned about a wage price spiral forming. And that means more hikes to the cash rate and higher interest rates overall. That's it from me this week. Talk to you in the next one.